Hey everybody, I'm Aaron Norris. It's Friday, January 23rd, and this is the Norris Group's Real Estate Headline Roundup in 2. The National Association of Home Builders reported builder confidence decreased by 1 point and now stands at 57, although builders broke ground on the most single-family homes in 7 years. Housing starts increased 4.5% month over month and exceeded expectations for the 4th straight month. The Mortgage Bankers Association reported an increase in mortgage applications by 14.2%. Mortgage rates decreased again, with 30-year rates at 3.63% and 15-year rates at 2.93%. Wow. And home prices saw a 0.8% gain in November, exceeding expectations. Obama's latest State of the Union address covered little housing and instead focused mainly on the economy and maybe throwing a little bit of shade. Obama wants to see tax hikes on dividends, capital gains, and investments, with couples making over $500,000 seeing rates increase to 28% from the current 23.8%. When he took office, it was 15%. He also shared his proposal for free community college for 2 years. Somehow, I doubt Republicans in Congress are going to go for all that, but we just have to wait and see. Chief economist of Freddie Mac, Frank Notaf, he's been on our radio show before, thinks mortgage rates are going to hover around 4% all the way through mid-2015, but he doesn't say that those rates are going to be around forever. He sees economic growth being bolstered by the interest rates and decreasing gas prices, making the economy stronger, and maybe the feds will be a little bit more comfortable raising those rates. And 2015, I believe, was the date that they said they'd start thinking about that. He also expects a 3.5% increase in housing price appreciation this year, and an increase in wages as labor markets continue to tighten. Returning seasoning rules might not be the only thing that holds up real estate investors in 2015. Fannie Mae announced back in October it was rolling out its proprietary appraisal analysis system called Collateral Underwriter. While it may decrease repurchase risk for the government, appraisers think it's going to lead to slower and more costlier sales closings and possibly more disputes between buyers and sellers trying to close. Lenders will start having access to the program to test it out next week, so we'll see when that's going to roll out. That is it for the headlines, but we have many more, of course, on thenorrisgroup.com/blog. What did we miss? Leave comments on YouTube or Facebook, and maybe we can add it to the blog here shortly. Up on the radio show this week, we've got the second interview with Harry Dent. He's an economist and author. Don't want to miss those. Always well listened to whenever he's on the show. Heads up, we've got our event coming up next week, January 31st, Saturday, all-day event. 2015 Proceed with Caution. That's Bruce's information, a 290-page book, 400 charts talking about what he's predicting for the years ahead and what we're planning to do here at the Norris Group and what our focus will be. We just got approval from the Bureau of Real Estate Appraisers for 7 hours of continuing education. So for those appraisers out there who are attending, make sure you contact me, because we have a little bit more of a process we have to follow. So definitely contact me about that. Starting February 3rd, we're going to be hitting the road again doing Discover How to Create $100,000 per deal in 2015. February 3rd, we'll be at OC FIBI. February 5th, we'll be back in San Diego FIBI. March 11th, we're going to be in Sacramento at Norcal REIA, and back in Orange County March 12th at OCREIA. For more information on events and all of our hard money lending programs, including fix and flip, buy and hold, and new construction, check out thenorrisgroup.com. Or for more information about passive investing with trust deed investing, check out tngtrustdeeds.com. Have a fantastic weekend, and we'll see you next week.